Hey, how's it going, YouTube? How y'all doing today? Got these animals a little bit of breakfast. We did get rain yesterday. We got about an inch of rain. That front field got just about enough rain on it to really get it going. This grass is gonna start growing again. 2 days ago, I went and I picked up my fertilizer. This time, what I did was I got a 1 ton of urea mixed with half a ton of a 1717. So I ended up getting 1.5 tons of fertilizer. While I was at the co-op a couple of days ago, I bought enough fertilizer supply to last me for 2-3 months this time instead of 1 to 2 months. I'm just gonna start buying things in a bit more bulk just to make my life a little bit easier. And so yep, I got enough fertilizer in storage right now for about 2 to 3 months instead of 1 to 2 months. And I got the right fertilizer to put on this field. So this grass is going to be growing. I put about 500 pounds on this 7 acres right here of that fertilizer mix. Got about an inch of rain on it yesterday. That front field, the Sudan grass, it's going to be growing in real good. Right now it's the end of April, May, June. Sometime around June, all of it's going to have to be cut, but I'm guessing about I'm anticipating that about next month it's going to be about tall enough for me to start cutting it for zero grazing. And tonight it's supposed to get cold, so I'll have to see what happens. The seed may go dormant for a couple days. Even with the moisture on the ground, it may go dormant because it's supposed to drop to about 45 this evening. But yep, I was working on my budget too, thinking about what I'm gonna do with this capital, and I got to figure it out. When I sell these cattle and I get my money for them, I'm gonna pay for all my equipment. And well, I took a good look at all my finances, and when I'm anticipating that I'm gonna have about somewhere between $7,000 to $10,000 left over after I pay for all my equipment from the money that I make on these cattle. And so that $7,000 to $10,000, it'll be enough to I'm gonna hold on to that money, and then I'm gonna go and get that well when I pay for all my debts, when I pay back all my debts, my credit score is gonna go real high, and my income is gonna go real high too. And so I'm gonna go into the bank when my paperwork looks like that, and I'm gonna ask for that loan. But right now, I need a loan for about well, I'm just gonna talk to the banker and I'm gonna see what they say first. I'm gonna see what they say first, but the numbers that I'm looking for in terms of minimum are $75,000 on a 20-year term for 5% interest. And that's the minimum amount of money that I'm looking for, as well as the time length. If they give me something like an interest only loan or something like that, I don't mind if it's a shorter term. But if or whatever, I guess an interest only loan would I don't know exactly, but I'm just gonna have to go and talk to the banker, and I'm gonna see what they say. And I know what well, I'm looking to pay about $500 a month for $75,000. And if I can do that, the big plan right now, these cattle are getting real hefty. They got a lot of grass underneath them, and they got a lot of grain right now too. And yep, they're actually having difficulties eating in the evening. But the big plan with the money right now is that if I need equipment, I'm gonna buy it in cash. And if the only thing I'm gonna take leverage for is cattle. That's the name of the game right now. Because if I take leverage for equipment, I was taking a look at my finances yesterday. If I take leverage for equipment, that equipment does indirectly make me money, because I am able to do things like plant seed for the cattle, plant grass for the cattle, and work the land, etc., etc. But it doesn't make me money directly. Cattle make me money directly. If I buy cattle and I feed them and I put weight on them, I make money. So it's a direct source of money. And it's also a very liquid market. Like cattle, I can go practically any day of the week, and if somewhere they're selling cattle, somebody there is a sale barn somewhere buying or selling cattle somewhere every day of the week in every corner of the country. And so cattle is a very liquid market. And so something like if I bought a 50-year-old tractor, that's not a very liquid market. It's going to be difficult for me to it's going to take a lot of time, it's going to take a lot of effort to get that tractor sold, and then to make a positive return on it is going to be difficult. I'll probably have to sell it for a loss. But the cattle are a very, very, very liquid market. I can go and I can buy cattle any day of the week, and I can go and I can sell cattle any day of the week. And so that's why I'm going to take leverage for cattle, and I'm going to buy equipment with cash. And if I do it like that, that'll just help me keep my finances in order relatively easy. And the big idea is I'm going to take a look at how much money I make in the year. I'm going to go to the bank and I'm going to ask for that amount as a loan, and then I'm going to take that loan and I'm going to buy cattle with it, and then I'm going to deduct all of that on my taxes so I don't pay any taxes. And then and that's kind of the general idea of what I'm looking to do with the capital. So with cash, I'll buy equipment. If I need equipment, I'll buy equipment, and with the leverage, I will buy cattle. And the amount of leverage that I'm looking for is the amount of income that I make this year, so that I can purchase the cattle and deduct it off my income so that I don't pay taxes. And that's the name of the game. That's the rough idea for the budget. And these cattle are looking real good right now. They're gonna be ready for market in 3 months, and they're gonna be heavy. These cattle are gonna be real big. They got a lot of grass underneath them right now, and about next month I'm actually in a situation right now where I have too much capital. I have way too much capital, and I need to find investment opportunities where I'll end up paying a bunch of taxes. And the ironic situation about this is that if I have to pay taxes, I don't have enough capital. And so I need to invest. If I have to pay taxes on the totality of my income this year, I'm gonna get clapped. I mean, it's gonna be a lot of money. It's gonna be a lot of money. And so I need to perpetually look for investments. But the thing is that cattle is a terrific investment. It's very liquid, and I can pretty much buy as many as I want, and I can sell as many as I want too, practically. And so yep, that's the idea. The leverage, I'm gonna use leverage on cattle, and I'm gonna use cash for equipment. And the only really big piece of equipment that I'm looking for right now is a square baler. That's the only thing I'm looking for. And I'm looking, and I don't realistically need that square baler until about July. In July, when I take these cattle to market, I'll have a bunch of Sudan grass up front, and I'm gonna bale it for hay so that it doesn't just go to waste. And that's about the only I don't need a square baler for about another 2 months. And so I'm gonna look for a good square baler. I'd like to buy one for about $1,500. If I can find one for $1,500 and it's pretty good, I'd be willing to buy it. And so I'm gonna stop taking leverage for equipment though. Starting right now, I'm gonna stop taking leverage for equipment, and the only thing I'm gonna take leverage for is cattle. But I'm looking for a square baler. The Sudan grass up front, it's going to be pretty good. The Sudan grass up front, I've been if there are any bare spots, let's say that I have a big old bare spot on the field somewhere, I'm just going to walk over it with a hand spreader, with a hand seeder, and just reseed it, just broadcast it, right? It ain't that big of a deal. I mean, it's only 2 acres. I can literally probably seed the whole thing up front by hand. Like if I didn't have a grain drill or anything, I could probably seed the whole thing up front in like 2 hours by hand. I mean, with a seeder, it took actually probably take me more like 5 hours. I mean, if I was like sprinting, like spinning that hand seeder as fast as I could, I mean, maybe it'd take me 2 hours, but I don't think I could sprint for 2 hours straight. I'd have to be hauling tail to seed it by hand in 2 hours, but it maybe take me half a day to seed the whole thing up front by hand. And so if I got a few bare spots up front, I'm just gonna walk over it with a hand seeder and just seed it by hand. And so the Sudan grass is going to be good. It's going to be just fine. That's coming in good. I'm going to be cutting it for these animals to zero graze on. And my big thing about the Sudan grass up front is that I was taking a look at what I would like to do with that Sudan grass. And that Sudan grass up front, if I bale it and then I sell it and then I buy grain with it, the big advantage of me baling it and selling it is that I can put that down as revenue on my farm. I can put that as income on my farm, and then I can purchase grain. And when I purchase grain, I get a tax deduction on it. And so I get a massive tax break, as well as increase the revenue on my farm if I sold the hay instead of feeding it to the cattle. And so but here's the thing, right, is that about May, the end of May, in a month from today, or about the middle of June, the chances of me cutting hay in the middle of June or in early June are practically zero. It's going to be too wet. And I've been watching the Weather Channel, and there's something saying something about El Nino. It's going to be El Nino this summer or something like that. And they're saying that it's a 75% chance of El Nino going on, and it's supposed to break the drought or something like that. And so I'm guessing that I don't know what I know. I've heard of El Nino before, you know, like I know it's like a weather pattern, but I don't know exactly what that means. But they're saying it's going to break the drought, and so there's a 75% chance of it happening. And so I'm guessing that it's just going to be wet. This summer is going to be a little bit wetter than it was last year. And so the chances of me cutting hay in June right now are looking very slim. And I'm going to need to cut the Sudan grass in June, or it's going to get too tall and it's going to go to seed. And if it goes to seed, it ain't going to really be worth anything in terms of animal feed. I mean, I could cut it for silage at that point, but I don't want, but I ain't looking to do that. I'm looking to just cut dry hay. And so it looks like right now in June, the only thing that I'll be able to do with that Sudan grass is cut it and give it to these animals fresh as zero graze feed. And so even if I wanted to sell it, I couldn't. But in July, when I take these animals to market, and that Sudan grass is still growing in up front, I could bale it then. I'll probably be able, I would say that there's a 95% chance of me being able to bale it in July. And in July, I could bale it, I could sell it, put that as revenue on my farm, take that income and buy grain, tax deduct it, and then bring in animals in October. Take a look at how much money I'm making, and then take a look at how much money I'm making, go get a loan for that amount, and then bring in animals with that money. That's the plan right now. That's what I came up with early this morning. I just sit in a dark room for about 2 hours in the morning at 5 in the morning, and I just think about what I'm looking to do with my money. But this guy here, he finally got a handle on that bloat. I guess he stopped bloating. He just looks a little fat now, so that's good. But that's about what I came up with. These animals are walking back towards the grass, and we're gonna go take a look at the grass right here, because the grass is definitely already greened up. Man, this soil, when it gets wet, it's extremely slick. I almost actually there have been a few times where I've been walking around on the soil after rain, and I practically I nearly slipped straight into the back of the animals. And that's one of my big things in terms of safety concerns is if I slip near the cattle and I fall into them and I freak them out, they could end up trampling me. And so that could be a big problem. But the grass is definitely greening up. It's greening up drastically, and once it gets green like this, it'll start growing. It'll start growing very rapidly. And so these animals are going to have a lot of feed here pretty soon. Yep, I'm just taking an inventory on my grass right now, and the grass looks very, very, very good. Yep, I remember last week I was like, oh man, this grass is kind of looking a little wonky. It's looking like it needs some water, but it definitely got enough water on it, and it's growing. Yep, the grass looks very good. Grass looks very, very good. And so next month, next month it looks like I'll be cutting the Sudan grass up front to feed these animals. I won't be able to bale it even if I want to, so I'm gonna have to feed it to these animals. And I may end up in a situation where well, here in about 3 months, these animals are gonna look real plump. They're gonna be plump, they're gonna be fat. And when I take them to market, they're gonna look good. They're going to look very, very, very good. And then actually they're starting to look real good right now. I'm already actually starting to realize that they are plumping up. This is a Brahmin influenced animal, so he kind of, like this guy right here, he plumping up. But these Brahmin influence cattle, it's hard to tell if they're really getting plump. The Brangus animals, it's a little bit easier, and the Angus animals, they just get real large real fast. The black-hided animals, the commercial black-hided animals, they get plump real fast. And so one thing that I'm looking at right now is that I need to put together I need to find one lot of animals that's going to cost me about $75,000. I need to find one lot of animals to put on this field by the end of this year, and that should be a majority of my taxes just gone out the window right there. A majority of my taxes, I can get rid of the taxes in one fell swoop by just bringing in one lot of animals. That's the plan, because I don't want to go around running around like a chicken with my head cut off trying to put animals together to get rid of my taxes. And right now I have plenty of time, so I need to keep an eye on the cattle market and just find one good lot of animals. And it needs to be a decent deal. It doesn't need to be a good deal, but it also can't be a bad deal. It just needs to be right down the middle of the road. And if I can do that, I'll bring in the animals this year, I'll tax deduct them, and then worst case scenario, or I'll sell them early next year, but I'd like to hold them until about this time next year again too, to really get that weight on them. But if I bring in 4-weight calves, they're going to put on weight quickly. If we have a mild winter and our grass grows in real good, and I have a stockpile of grain that I bought from if I have a stockpile of grain that I bought to deduct that on my taxes, the cattle are going to get very big very soon, or very quickly. And well, this morning I was also thinking about my stock market, what I would do in terms of the Roth IRA. And in all honesty, what I may do, instead of buying U.S. Treasury bonds, is buy a call option on a U.S. Treasury bond. And the reason that I would buy so a little bit more of a deeper, so I kind of just went over this in my head of would I actually like to invest up to $6,000 a year into the U.S. Treasury. U.S. Treasury bond, a short-term U.S. Treasury bond. That's the bond that I believe has the most opportunity in the market right now, just because of the yield curves being inverted. But my big thing about the U.S. Treasury bond is that if the economy were to be functioning just naturally, just on its own, the yield of the bond would be influenced by the health of the economy. So if people were spending a lot of money, if there was a lot of inflation, because people were feeling wealthy, people felt like that their money was buying them a lot of things that give them opportunities, etc., and they were spending a lot of money, the yield of the bond would go up, the certificate price of the bond would go down, and that's what would happen in a natural, healthy economy. Oh man, this heifer really fattening up. But right now what's happening is that the central bank is kind of fiddle farting around with the yield curve. They're with quantitative tightening, quantitative easing, pushing the federal funds rate up and down and stuff like that. They're kind of fiddle farting around with the yield curve. And so in a situation where we end up with the central bank looking to if we end up in a situation where the central bank drops the yield again on the federal funds rate, on the short end of the curve, they drop the rate again. They drop the rate again, and then they start quantitative easing. What will likely happen with that is that they will also start borrowing. They will start lending a lot of money to the government. And if that happens, everything is going to inflate. It doesn't matter if it's a bond or if it's a regular old asset. Something like well, I guess I ain't gonna say regular old asset, because there are a lot of assets, but the broader equities market as well as the bond market is going to inflate. It's going to go up. Everything, it's called the everything bubble, I guess is what some people call it. But if the federal funds rate drops, what usually happens is the government will borrow a lot of money, like trillions of dollars, because the interest rate has dropped, and they'll inflate everything. That will cause the dollar to lose its value very quickly. And so in that situation, it would be good for me to hold bonds instead of cash, because the yield is going to drop. The yield is going to drop, and the government is going to be printing a lot of money. So the price of the bond will go up. It's a double whammy. If we actually end up in a situation where the government willingly just if the government just allows the market to just kind of go on its own thing, and they leave the markets alone, and the government stops all this quantitative stuff, quantitative tightening, quantitative easing, and the fiddle farting around with the federal funds rate. If they stop doing that, what will happen is that the market will naturally take over. And when the market naturally takes over, if asset prices drop, if the economy does poorly, the price of the bonds, the certificate price of the bond goes up, and the interest rate will drop. The yield will drop, and so the bond market is essentially an inverse of the broader equities market. So if the broader equities market is going up, business is good. Business is good. People are spending a lot of money. Businesses are doing real good. The equities market will go up, and to counteract that, to kind of slow that down, to moderate that, the bond will the yield of the bond will increase to kind of moderate the economy. But right now, with the whole central bank business stuff going on, it's they move a lot of money. They move trillions of dollars, and so it influences the economy drastically. But in a situation where where if the bank does, if the U.S. government decides to do I guess the healthiest thing for the economy would be to just let the economy correct itself, and let the bonds do whatever they're gonna do, and let the assets do whatever they're gonna do. But that could lead to a sharp correction in the markets. Well, it will lead to a sharp correction in broader equities, is what I would anticipate, and then the certificate price of bonds would go up, and then the yields would drop. But in that situation, I would still have done very well if I held on to bonds. The place where I would do poorly if I held on to bonds is if well, okay, so the idea of me buying the U.S. Treasury bond is to be a hedge against my assets. Like if we ended up in a horrible situation where the economy did horribly, and my assets began to drop in price, my cattle, I see cattle like I see gold. I see land like I see gold. I see land like I see cattle, and I see cattle like I see land. If the price of gold is gonna go up, a lot of people see gold as kind of like this thing that's like the ultimate currency. That's ultimate. That's what people see gold as. And if I were in a world where I needed gold, I would rather just have cattle, and I would rather have land. I would rather have cattle, and I would rather have land before I had a gold coin. And so I'm surrounded by gold. You see what I'm saying? Like the way I see it, each one of these cattle, they are worth their weight in gold. And so I ain't gonna buy any gold, and I ain't gonna buy any silver. If I feel like buying gold or silver, I'll just buy more land, and I'll buy more cattle. But if the economy does tank horrifically, the government just says that, oh, y'all are on your own, and the government and the economy's just gonna do its own thing, and y'all just gonna have to figure it out, which I think would personally be the best thing to do. But that ain't my call. That ain't my call. And so if that happens, the price of beef will fall. the price of cattle will fall, because people won't be eating as much beef, because a lot of people broke, right? A lot of people broke, not much money in the economy. But in that situation, I would have done very well with my bonds. And so now I'm kind of wondering, man, instead of buying bonds, should I just buy like a 2-year option on a short-term bond? Because if I bought a 2-year option on a short-term bond, I would be leveraging 100 shares for the price of a call option. And sometime between now and 2 years, if I break even on that call option, I could just sell it and then rebuy it for another 2 years out, right? And just rinse and repeat. I could even if I didn't make money on it, I would just hold it as a hedge for the entirety of my assets, for the majority of my assets. And so if I bought a 2-year call option, and it wouldn't matter. Sometime between now and 2 years into the future, if it broke even, I could just sell the thing. I could sell it, and then I could buy another option for 2 years further out, and just see it as my insurance plan. Because if my the majority of my assets drop, if the economy craters and like I begin to lose value in my farm and all that, etc., I could just I would make a lot of money on the leverage that I held on that bond. And so that would help me get through the worst of it financially. And so, but yep, that's the big thing. I'm looking into buying a call option for a short-term U.S. Treasury bond 2 years into the future. And then I'm looking to leverage for cattle, and I'm gonna use my cash to buy equipment. And I'm going to take enough leverage to cut my taxes to zero. Because if I need the money, why would I pay taxes? If I need the money for this business, I ain't making a smart financial choice if I'm paying taxes. And so I'm gonna buy cattle. I'm gonna buy enough cattle to take my taxes to zero. I'm gonna look into buying more when my paperwork looks real good, when my income looks real good next year. I'm going to take that paperwork to the bank, and I'm going to file it for a USDA loan to buy more land. And then I'm just going to keep rinsing and repeating. I need land, and I need cattle, and if I have grass, I have money. That's how I look at it. I need grass. Before I can do anything, before I can raise cattle, before I can make money, I need grass. I need large expanses of grassland. If I have large expanses of grassland, I can turn that grass into money. I can turn that money into cattle, whatever I need. I can turn the cattle into tax deductions, which turns into more money. So that's the name of the game right now, is that I just need to keep investing, or I'll just end up having to pay a lot of taxes, and it just won't be that it won't be a good time. Okay, but that's it for me today, YouTube. Y'all have a good one.